Thank you for watching ENECHANGE presentation of FY23 second quarter financial results. I'm CEO Yohei Kiguchi. The key message of this presentation is steady but muted progress, London Bridge in sight. We always start with the share price. So in 2023, the share price has been gradually recovering alongside the market. However, we understand that once our actual strong result will be coming out in third and fourth quarter, so we are hoping that our share price will be more recovering later half of this year. So the key message is steady but muted progress, London Bridge in sight. So what I want to say is the actual progress is steady, it's planned, but the muted. The point I want to say is the actual number the investor can see in sales and profit will be only realized in the second half of this year. This second quarter result should be the bottom of this year because all the preparation is underway and very well prepared, but the number will be delayed in the next quarter. The London Bridge has been the metaphor of our exciting EV charging driven growth and profitability since we've been using last summer. So we are saying we could be able to see the London Bridge and then we are driving towards that, but we got into the tunnel because of the Ukraine war. And then we had a really hard time in the middle of the tunnel for maybe 2 quarters. And then once we get out from the tunnels, we can see the London Bridge, but still some distance away. So then now we are happily and finally saying we are approaching to the London Bridge. And then we actually, as of today, in August 2023, we are actually on the London Bridge. But this number, quarter 2 result, is by June. So by June time, that's before London Bridge. But now August time, we are on the London Bridge. So the actual progress has been going well, but again, it's muted in the sales and the profit numbers. So that's a point I want to deliver to the investors. Just quick point, why we're using a London Bridge as a metaphor is our EV charging theme songs is we're using a London Bridge. EV charging energy, that's a TV commercials everywhere in Japan. That's the most well-known brand in the EV charging in Japan. So we are now finally approaching the London Bridge, but the number is still muted. Let's look at numbers and you will understand. We will skip the executive summary as always. So let's look at numbers first. The progress of the first half of the year is 40% in terms of sales of the full year forecast of 5.25 billion JPY, which is slightly below current progress, which is meant to be the 50%. But again, it's not the problem. We are originally expecting the more skewed sales distribution towards the second half of this year. We're just saying this is on track, in line with expectation. So our current forecast will be maintained. And then this number will deliver investors a very mixed feeling because the sales number is down YY and QOQ. So it's obviously not ideal. The key takeaway from today is this number is the bottom. I'm going to talk about the quarter 3 and quarter 4 numbers later in the presentation. We are confidently expecting the quarter 3 and quarter 4 number will be much higher than the quarter 2 number. So the quarter 2 is the lowest point of this year, which was originally expected. So everything is under control and predicted. And then similarly, since the sales declined, the profit declined. So the core gross profit is declined, but again, the same reasons. And the ordinary profit is similarly declined, the same reasons. Then expenses is increased. This is actually slightly different from our usual explanation. I've been explaining to investors that we've been increasing investment into the EV charging. That's the main driver of the addition of the cost. However, this time is slightly different. we actually mostly maintain the cost of EV charging. The more main driver is the platform business, because we have been dropping the platform business investment since the Ukraine war started last year. As you can see, like the cost has been dropped. So, but we now recovering. We're restarting the customer acquisition activities. So that's why we are trying to be back to the pre-war level, which is like a more quarter one, quarter two of the level of the last year. This is a little bit like a jump from the kind of the expenses this quarter. But again, like this is only again one-time effect. So we're not gonna like jumping up the cost every quarter. We're gonna maintain the similar level of both EV charging and platform business. Let's talk about the numbers in the platform business. So again, the sales decline, YOY and actually QOQ. And then the actual number is very mixed. Let's talk about the recurring revenue first. Recurring revenue increased from YOY and decreased from QOQ. Then the increased YOY is two reasons. One, the number of users increased. And two, the energy bill, average energy bill being increased compared to pre-Ukraine war level. But from the previous quarter, it decreased due to two reasons. One, the energy consumption, one is the seasonalities. The Q1 is the winter energy consumption, and then Q2 is the spring consumption. So naturally, like people energy consumption reduced. Two, also energy bill, energy price also coming down. Q1 was high, and then Q2 is low. So that's why like energy price is coming down. So basically, like our ARPU of the recurring revenue has been increased from YOY, but decreased from QOQ. And what the level of the future is somewhat like we're expecting around like a Q2 level will be the new standard or our recurring revenue. I'm sure, like I said last quarter, that Q1 level recurring revenue a little bit surprisingly high to us. And then, so that's a little bit like bonus to us, but which has been a little bit calmed down. But again, like although like I said, it calmed down, decreased, but it's still higher than pre-Ukraine war level. We are expecting to maintain the same level of the recurring revenue on the next quarter onwards. Non-recurring revenue also having a very mixed result. So non-recurring revenue, the number of the customer acquisition has been kind of coming back to the similar level like as we were. It's more like an ARPU point. The ARPU is compared to YOY the last year, is still on the way of the recovery. So it's not fully recovered, like not 100%. So they say like it's more like 60-70% recovery. So still reduced. However, from the previous quarter, has been improving better. So the non-recurring revenue is a little bit of opposite from like recurring part. So the situation is getting back in the better than the previous quarter, but it's not yet to reach our highest level, but like which is on the way of recovery. On the profit side, I understand like investor must be a little bit disappointed at seeing the negative profit, which I understand that. And again, there are two reasons. One is the non-recurring revenue is reduced, and which has nearly 100% gross profit margin being reduced. And more importantly, the customer acquisition activity has resumed. And then the actual revenue and profit will be followed in the next quarter. But this quarter is just all the initial setup fee is just recorded. So again, like we've been stopping all the customer acquisition activities since April last year. And then we just suddenly starting everything. So we need to start like, start doing advertising. We need to set up the core customer support centers, everything. It costs some for just the initial setup. So very, very just temporary loss. And as you can see historically, like apart from like, the Ukraine crisis time, over the last year, the platform business is able to generate the steady sales and profit growth quarter to quarter. And then since we are now officially saying like the energy market status being back to the pre-war level, so we are expecting the quarter three onward. We are kind of steady sales and profit growth from this platform business. The KPIs are similar. So the number of the users, we actually both reaching like corporate and household reaching the record highs. and which is good. If you look at the last year numbers, we are very, very struggling. Then with some of the reducing number of the users due to like withdrawal of the energy companies. But now, like, back to normal, kind of normal growth trajectory, because energy companies now start acquiring customers. The energy bill has been risen by, I don't know, like maybe 30, 40, 50% compared to the pre-war level. So energy companies, energy users demand is much higher than the before. So we are more confident in acquiring number of the users every quarter. And ARPU is again like a little bit like a mixed result of both recurring and a non-recurring effect. Like I have already explained in the previous slide. So the ARPU should be recovering. The recurring revenue is like, and we're gonna probably maintain the same level, but like the non-recurring revenue should be improving every quarter. So we are coming back to our kind of pre-war level in the coming quarters. The business environment, as I've been saying that, like the market being recovering right now, it's compared to 2022, the energy wholesale price has been much calmed down, especially like in the quarter two, the April to June time, the price has been much calmed. And then as you can see, still like first quarter was taking a much higher, which causing just temporary jump of the recurring revenue, and the current level quarter two will be the new norm. And then on the right side, the government is trying to reform the energy business environment in Japan. They start officially discussing the unbundling or the ownership of energy companies, which I think that's not the easy thing to do, even for the government, because like every single energy company in Japan, publicly listed companies, and having like tens of thousands of the like investors as well. And unbundling of ownership is not an easy task, and it might maybe not happen, but that's not the main thing. Like the most important thing is government is trying to improve the competition in this sector, which government is officially showing commitment in the energy sector. So which is generally very, very positive for us to have a better, healthier, fairer energy retail market competition. The last slide on the platform is the market share. The nationwide market share has been decreasing since the Ukraine war started. The energy companies started withdrawing the businesses or stop acquiring customers. And then, but I think like it should be bottom out. That this is a government stats number. So the latest number is like March this year. So it's like a little bit delayed number. Energy company restarting customer acquisition around May, June time this year. So the number should be bottomed out, and then the share of a new entrant should be increasing again when probably you see the next time, or at least like next time. So it should be recovering. So the market condition is generally improving, like it's already hit the bottom. That's the feeling we got. And then our market share is actually being increasing and jumping up almost in the middle of the crisis, because the energy bill is so high, and then energy tariff became so much complex. So the customer needs some professional advice how to choose better energy tariffs. We are the professional consultant and energy price broker. Like we advise consumers, like especially like more corporate customers, like they are always exposed to a much more volatility of the market. So we are helping them to find a better energy suppliers. But then like still like around 4% is still small. We are saying from day one of the IPO, like ENECHANGE share needs to be reaching around at least 10 to 20%, like as ASAP. So I think like we can see the 10% is not too far away. Like we can probably reach like within year or two. So that's something like, and we are generally very positive about the progress of our platform business. Second, let's talk about the EV charging business. Again, the sales is nothing. The actual sales will be coming in third quarter and fourth quarter, and due to subsidy application process. So don't worry about that. Once the EV charging start installing, our revenue, not only our hardware revenue coming in, once charging station is installed, which generate the recurring revenue of the charging session revenues. So then which is going to build up a much steady income recurring revenue into the company. So this number should be the bottom. We are anticipating much stronger sales from next quarter onwards. The similarly operating profit should be bottomed out. Again, as of today, like only the cost of the like personal expenses and advertising are recorded, and with no revenue coming in. But now, like we are expecting to have more revenue, like hardware revenue and the charging system revenue coming in, and then the number of the people should be already reached the decent size of the company, which is able to operate this business properly. So we're not expecting like that digging further. So that's the situation. So again, like I wanna thank investors like for the understanding of our business, because like when we started like this business in Q4 2021, then we've been investing into the EV charging business over a year and a half, and then unfortunately and also unexpectedly, the Ukraine war started. So like we are actually very into the much tougher situation compared to like what we originally anticipated. So I can say the last year and a half was really tough and really uncertain to me. So it must be much difficult for investors to understand like what's going on ENECHANGE. But now we are officially saying that Q2 should be the bottom of our result, and then we are seeing much higher growth, sales growth and profitability in the third quarter onwards. So now we are finally like kind of recouping all the investment over the over the last year and a half. So it has been a long journey, but we should be more positively recovering in the next quarter. This is one good surprise to the investors. Like number of the orders over the charging port hitting like really record high, nearly 3,000 chargers like within the quarter, just jumping up nearly like 1,000% increase from the previous year. When we started this business, I promised the investor we're gonna receive 3,000 charging port orders by June 2023, but we managed to achieve this 3,000 target 1 quarter earlier. And actually, then by the original deadline, we are achieving more than 200%. So I'm very proud about like our progress about EV charging business. And again, like we surely be more confident in dominating the EV charging business in Japan. The business environment around the EV charging in Japan is generally positive and even improving. The number of the sales of the EV and the PHEV cars hitting every time record high. So this time, like the 3.7% car sales are EV PHEVs. When I started this business, like it's around like 1%. So been increasing, and then it's not like kind of peaking out. Obviously, like it's just 3.7 is like still on the way. So it should be going up to 5-10%. So the number is going well. And also on the right side, the government is still keep providing like subsidies to EV charging infrastructure. So the primary allocation was quickly filled and closed in June. And then the government is now opening up secondary allocations, which will be determined around the September-October time. Again, the demand of the EV charging is really high. And then so although the government provide the much bigger subsidy this year, apparently which is not enough this year. So the government is also talking like a higher budget, like a bigger budget for the next year. So we are talking to government like regular basis, and the government is saying, so they are trying to get the bigger budget for the next year, and they're also trying to allocate the budget more efficiently. So I'm gonna talk about some rule changes about subsidy budget allocations. These are the 3 major changes. The first is like a limitation on eligible size. And the second is like just a cap over the installation limits. And the third is like kind of decision making process has been changed. And the first like eligible size is actually used to be originally there's no regulations. Like we can just put the EV charging everywhere, anywhere. using government subsidies, but like, government set more stricter criteria, like, where we can put the charging, which is fair. Like, we don't need like, the EV charging everywhere. Like, there's some locations, some sites needs to be prioritized, like a highway or like, highway, motorway service areas or hotels kind of things. So that's something the government is trying to do that. So, which is very, very welcoming regulations. And the second is also limit. Yeah, the number of charging station limit, which is also makes sense. So the government is setting up to 2 ports per site for the level 2 charging, which doesn't make sense because actually like some of the company is installing charging stations, like over hundreds of charging stations at a single site, which is just unnecessary number of charger at a single site. It's literally wasting subsidies. So, and it's actually more abusing subsidies. So some of the company, some of the company is actually abusing subsidies. So that's why government set the limit of number of the ports per applications. And then the 2 is actually like small, I understand. But like basically, if the charging port becomes too busy, we can add another 2 ports next year. So that's fine. So like, we can just gradually build up the number of chargers. We don't need to install like hundreds of chargers, in a single site at the same time. So that's something like government is making that changes, which is also welcoming. And then lastly, the subsidy allocation was the first come, first serve basis. So basically like anyone like just whatever like just file a subsidy application can get a subsidies, but which was not really fair because basically like, government should be evaluating like all the bunch of applications and then compare and then pick the best one. Let's say what mean by best is like what the best locations, qualified locations, and also cheaper, cheaper construction, cheaper cost per port. And then so the government is saying like we're not gonna be like first come first serve basis anymore. We're gonna accept the application and then more do the tendering process. We're just gonna line up all of the subsidy applications and then they're gonna compare and like more like do the tendering process, which gonna enhance the competitions of the EV charging operators. So basically, like that new regulation is much tighter and stricter. So which is harder for a company like us. However, we are generally welcoming these regulatory changes because actually like our internal regulation is almost aligned with the government's new regulations. So our impact of these changes is very much limited to our company. All right, let's quickly talk about the data business. Again, like data business is, as I initially explained to the investors this year will be very, very tough year for our data business because the energy company was very struggling last year. Every energy company had a huge losses last year. So that's why they are cutting the budget of the software investment this year. So it's more like a delayed effect from the Ukraine war will be apparent in this year, which is consecutively affecting the energy data business. But we actually managed to survive and it's still showing good profit and then decent growth this year. So we are saying we're just showing like our data business is, as you can see in the KPIs, we are not losing customers. We are maintaining the ARPU. So we're saying like the market is much tougher and inevitably tougher this year. We knew that, and we'll be recovering the next year. We have a much positive outlook next year, like because energy companies' margin situation, profitability is recovering this year, and they can afford more software investment next year. Although the market is much tougher this year, we showed a very resilient data business revenue and profit to the investors. Okay, then this is the last part. The forecast for this year is again like we're gonna maintain our sales and profit forecast. Although the half year progress doesn't look appealing to the investors, the sales progress of 40% is actually below our yearly forecast. But again, like it's all aligned with our initial expectations. again, like sales will be skewed like in the second half of this year. And also we've been saying to the investors, the second half will be profitable. Second half will be profitable means the first half is dig deeper than yearly number. So the first half is dig deeper, and second half we've been profitable. Then we're gonna probably end up landing up 900 million losses around that, and then we probably say we're saying like next year we're gonna probably back to positive profit. So I'm saying the first half of this year should be the bottom, and then we are seeing the better result in coming quarters. We also started the forward guidance of the next quarter result. The quarter 3 we are announcing now the 40% sales growth from the quarter 2. So again, like this quarter is like around 1.1 billion sales. So means like in quarter 3 is gonna be like around 1.4 billion. So that's like how the investor can understand. And also we maintain our full year forecast. The investor can guess the quarter 4 number as well. If you do that, like the quarter 4 number should be higher than the quarter 3 number. We're confidently saying that quarter 2 should be the bottom, and then quarter 3 should be a 40% increase, and the quarter 4 should be even higher. So that's what we are expecting, and then we are still confidently saying the quarter 2 is the bottom. And then finally, that's the last slide. The ENECHANGE and myself is like serving the bigger responsibility of the policy making and policy suggestions in the green economy fields. So ENECHANGE is still only one and the leading company as the listed energy tech companies. So not only like just for our own sake, for the better, greener future for Japan, we are actively advising the government how to achieve the net zero. Again, this is the last slide. To sum up, the key message is a steady but muted progress along the bridge in sight. I really hope the investor can understand what I want to deliver the message by the muted progress, and then we're approaching London Bridge. Thank you so much for listening to my presentation. That's all from me. Hope to see you next time. Goodbye.